FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. We're taking a look at Euro USD, and you can see on the left we have the 3-hour time frame, and on the right we have the 15-minute time frame. So the reason we're taking a look at this particular pair is because I want you guys to understand what's happening so far on this pair and the actual setup that was produced by Euro USD during London session today, and how you could have benefited from this particular setup. So as you can see on the 3-hour time frame, we're basically coming off a brand new peak formation high. So a couple of elements that you should understand from looking at this 3-hour time frame is the fact that we've completed already a full cycle, because we've gone to 284 on the pips from the previous reset, and that averages out to be about 3.2 times ADR. Because this pair is averaging about 88 pips or so, give or take. You could see here that essentially this peak formation, all it did was, number one, complete a cycle, but number two was grab market maker orders that we have up here, which we had marked. Now, for those of you asking, these orders that I have marked here, these are all orders that I personally mark myself on these charts. This is not an indicator. This is actually part of FXM Plus, which we give out to our members every single day during the London session. So if you have problems identifying peak formation highs, or want to know market maker levels or where they are as far as orders go, then FXM Plus is going to be the place for you. The link is in the description. But essentially we have market makers grabbing orders from the very top here, creating the peak formation high that you see here on the 3-hour time frame. Now, when we go to the London session today, okay, here are the things that we want to look at. We could see that the Asian range itself was 33 pips, and we could see what ends up happening here at the very end of the Asian session, which we get a push up, but we don't break the Asian session high. This essentially helps create the first leg. Now, on the second leg here, okay, we have obviously more than 5 candles between the first and the second leg. Now, the reasons that I know that this right here would be the first leg is the fact that we end up getting a railroad track here, and then we get a move away from that particular railroad track here, and then we go back up to retest. The important factors about the retest itself is that you can see that this one big candle right here, this blue candle, took out all of this trading that was being done before the London session even started. Okay, so the fact that this one candle took out everything and then did not want to go any higher, that's a key point right there. Okay, now on the second leg here, we actually don't get a second leg pattern, meaning that we don't get a railroad track, we don't get a star pattern, we don't get a quarter wood, we don't get any of that stuff. Okay, that doesn't mean that we still can't trade it. Okay, it just means that we want to wait for other factors to help confirm the actual trade setup. So in this case here, the pattern itself, right, is a type 2 pattern, trade out of the edge, which is essentially this right here. That's your pattern itself. Now, the entry for this specific pattern is going to happen after we break previous structure. So what I mean by that is, if we take a look at the structure itself of the M pattern here for a trade out of the edge, we have this red candle here. The important factors about this red candle is the fact that it breaks below the closest structure that was created. Basically, it's the apex of the M that's created, right? So when we create the M here, we create this apex. Okay, this apex right here, we want to see it break below this, and most importantly, we want to see it close below this actual structure. All right, because that lets us know that, hey, we may not have a railroad track or star pattern or a quarter wood. We end up getting a break of structure here. Okay, now if we add in another confirmation, you'll see what I'm talking about here. So when we add in our EMAs, okay, that we use for confirmation, right, we could clearly see that the same candle here actually closed below the 13, okay, the 13 EMA. So the 13 EMA, essentially, if we don't get a second leg pattern, allows us to use the 13 EMA as an entry as long as we can close below it, but most importantly, it also closed below structure. So the setup itself looked like this. You have the entry is right at the end of that candle. We don't have a pullback. If we had a pullback, great. You would have taken the trade on the pullback, but this one did not produce a pullback. Obviously, the stop loss goes above the closest high here, which is the second leg. Now, the stop loss could be anywhere from 15 to 20 pips, depending on what the spread is at that particular time, because you have to take that into account. Okay. And then essentially we're trying to go just 2-to-1 risk to reward ratio on this particular trade. So 2-to-1 would look something like this. And then that would be the trade setup. All right. Now, if we take a look here on the 3-hour time frame, right, what we're trying to get to here is, for me, if I look at this 3-hour time frame here, the first place from this peak formation high that we can look for really any kind of real big structure for price action to be attracted to or to go to is going to be here. Okay, so essentially this right here, 108,300, is going to be the ultimate target for that I want to see price action go to. Now that doesn't mean that I'm going to hold the trade all the way down to here, but this is the first obvious place for me that I could see where market makers would want to take price to. Okay, now this particular trade setup easily gives you a 2-to-1 risk to reward ratio. You actually end up getting, as currently as we're filming this right now, it's over 3.5-to-1 risk to reward ratio, over 62 pips on one trade. Okay, so I hope that this video allows you to understand the concepts of why the setups that we want to take happen and what things we are looking for in order for the really good setups to happen and the confirmations that we look for during these setups. Again, guys, if you need any more help with this, if you want to check out FXM Plus to get daily updates on market maker orders or peak formation highs resets, link is in the description. Thank you, guys. Have a great rest of your trading week. Guys, if you found value in the video and in the content that we make on this channel and you'd like to get more in-depth on our strategy, come join our next masterclass. It's on April 24th. Sign up for it using the link in the description. What you get for what you pay for is an unbelievable value for this particular masterclass. First, lifetime membership, so you'll always have access to the course itself, but you're not just getting one course. You're getting the masterclass. You're getting the previous mentoring course. You're getting an advanced course. You're getting access to the full unedited version of the Blueprint Summit videos. You have access to group sessions on a weekly basis. Every Sunday, we get together in a group setting, and you can ask as many questions as you want. Anything you want to ask away. We also give you access to the previous group session archives, which right now is sitting at over 110 hours of content. Okay, we give you weekly analysis, we give you midweek analysis update videos, you get MT4 and MT5 indicators, you get a customized trading journal, you get a customized backtesting journal, and most importantly, you get mentoring private chat through our Discord server. Okay, so everything you could possibly need to trade, you get from this masterclass. So join us, guys. We look forward to having you. We look forward to helping you reach your goals in your trading journey. Link is in the description. We'll see you April 20th.